Welcome to the deep dive. Today, we're taking a look under the hood at Intuit Inc.
That's the company behind TurboTax, QuickBooks.
Exactly. Credit Karma, MailChimp, those big names. We've got their latest numbers, the third quarter results for fiscal 2025 ending April 30th.
Right. And we're working directly off their official press release and the fact sheet they put out with it.
Yeah, the plan is to pull out the key figures, the main insights, just to get a clear picture of how this, major fintech platform is actually doing.
All right, let's dive in. I think the immediate takeaway is, well, it looks like a strong quarter, pretty much across the board.
Yeah, strong Q3. And they also raised their forecast for the full year, didn't they?
They did, which is, usually a good sign, shows confidence.
Definitely. So that top line number, total revenue, pretty impressive, right? $7.8 billion.
Yep, $7.8 billion. That's up 15% compared to last year. A solid jump.
And the CEO, Sasan Goodarzi, sounds pretty positive, mentioned exceptional momentum.
And he talked about Intuit becoming this one-stop shop of AI agents and AI-enabled human experts.
Ah, the AI angle again. Seems like that's central now.
It really does. And he specifically called out an outstanding year in tax.
Right, and pointed to TurboTax Live growth accelerating significantly.
Which suggests, the people are really starting to use those assisted tax services more. It's gaining traction.
Okay, so let's break down where that 15% growth is actually coming from, the different segments.
Sure. So the consumer group that's mostly TurboTax brought in $4.0 billion. That's up 11%.
Okay, 11%. That's big, but not the highest growth rate overall.
No, actually. The Global Business Solutions Group, think QuickBooks. For small businesses, they grew faster, up 19%, reaching $2.8 billion.
19%, wow.
And within that, their online ecosystem, so QuickBooks Online, MailChimp, payroll, payments, that part grew 20%, $2.1 billion.
So the cloud stuff is really driving it for businesses.
Seems like it. Strong adoption there.
And then there's Credit Karma, kind of the quiet giant sometimes.
It's not so quiet this quarter, up 31%. $579 million. Really strong.
31%.
Okay.
And even ProTax for the professional accountants.
Still solid growth. 9% increase to $278 million.
So that Credit Karma number, 31%, what's behind that surge? Just more people using loans and credit cards?
That seems to be the main driver. The release mentions strength in credit cards, personal loans, and even auto insurance.
So they're connecting people effectively with those products.
Yeah. And ProTax, well, 9% is decent. Probably this reflects that continued need for professional help for, more complex returns.
Makes sense. Okay, let's zoom back in on TurboTax, because an 11% overall growth for the consumer group is good, but you mentioned TurboTax Live.
Right. That's where the really interesting dynamic is. They're projecting TurboTax Live revenue, the assisted version, to jump by about 47%.
47%? Whoa!
Yeah. Hitting around $2.7 billion for the year, which is like almost 40% of the entire consumer group's revenue.
So a huge chunk is now coming from people paying extra for help. What's fueling that specifically? More users, or are they just paying more?
It's both, actually. They expect the number of TurboTax Live users to grow by 24%.
Okay.
And they also expect the average revenue per return, the ARPR, to go up by about 13%.
13% increase in what people are paying on average.
Exactly. So more customers choosing the assisted option, maybe wanting that expert help, maybe going for faster refunds, which can sometimes cost extra. Intuit seems to be making that value proposition work.
Right. And it looks like a deliberate strategy shift, doesn't it? Focusing on these, higher paying customers.
It does. They actually said they expect the number of pay nothing customers to drop. Quite a bit, actually. Down to around 8 million from over 10 million last year.
So they're kind of de-emphasizing the free filer segment.
Seems that way. Prioritizing users willing to pay for support or speed.
What are the potential downsides to that? Does it hurt their overall reach?
That's the potential trade-off, isn't it? You boost revenue per customer, but maybe you lose some market share at the entry level or brand visibility among that broader group.
Yeah, someone to watch long term.
Definitely. And because of this shift, they actually expect total TurboTax online units, so including the free ones, to dip slightly by about 1%.
Okay, so fewer total users online.
Yeah. And they also anticipate their overall share of total IRS returns might decrease just a tiny bit, maybe 1 percentage point.
So like you said, a calculated trade-off, higher value over sheer volume.
Exactly.
Okay, let's circle back to that Global Business Solutions Group. Nearly 20% growth. What's under the hood there?
Well, a few things. Their online services, revenue, think payments, payroll, MailChimp integrated with QuickBooks, that was up 18%.
Okay.
But QuickBooks Online accounting itself was up even more, 21%.
And why such strong growth there? Just more businesses signing up.
It's a mix. They mentioned slightly higher prices, yes, more customer growth, but also what they call mix shift, maybe businesses upgrading to more feature-rich plans.
Got it. And is this mainly a U.S. thing, or are they seeing international growth too?
They are seeing international growth. Total international online ecosystem revenue was up 8% on a constant currency basis.
So QuickBooks Online and those services are finding traction outside the U.S. too.
Yep. That whole segment includes QBO, the online services, but also, their traditional desktop QuickBooks software is still in there too.
Right. And just to touch on Credit Karma, again, that 31% jump. Anything else driving that besides loans and cards?
Not explicitly mentioned beyond credit cards, personal loans, and auto insurance, but the scale of that growth, 31%, is just really significant for an established platform.
Yeah, it suggests they're really tapping into what consumers need right now in terms of managing credit, finding loans, maybe saving on insurance.
Absolutely. It highlights their value prop in personal finance.
Okay, so revenue growth looks strong pretty much everywhere. What about the bottom line? Are they making more profit?
They are, definitely. For Q3, their GAAP operating income, that's the standard accounting measure, hit $3.7 billion. That's up 20% year over year.
20% jump in operating profit? Nice.
And non-GAAP operating income, which adjusts for certain items, was $4.3 billion, up 17%. So strong profit growth however you slice it.
And that flows down to earnings per share, presumably.
It does. GAAP diluted EPS was $10.02, up 19%. And the non-GAAP number was $11.65, up 18%.
Okay, so healthy profit increases alongside the revenue growth. Now, looking forward, you mentioned they raised their guidance for the whole fiscal year, 2025.
That's right. They bumped up expectations across the board for the full year.
So what are the key numbers there for total revenue?
They now expect total revenue between $18.723 billion and $18.760 billion.
Which is about 15% growth for the year.
Approximately 15% growth, yeah. A clear sign of increased confidence based on this strong Q3.
And profit guidance, also up.
It's also up. GAAP operating income now guided to $4.898 billion to $4.918 billion. That's roughly 35% growth.
35% GAAP operating income growth. Wow.
Yeah. And non-GAAP operating income expected between $7.543 billion and $7.563 billion, which is around 18% growth.
And earnings per share guidance.
Also revised upwards. GAAP EPS now forecast between $13.19 and $13.24. Non-GAAP EPS expected in the range of $20 and $7.12, both showing really significant year-over-year growth.
So yeah, that strong Q3 really seems to have boosted their outlook. Did they update the guidance for the individual segments for the full year too?
We did. Global Business Solutions Group growth now projected around 16% overall.
Okay.
With the online ecosystem part leading at about 20% growth and the desktop part in the mid-single digits.
And the consumer group, TurboTax.
Consumer Group forecast raised to about 10% growth for the full year.
Okay, ProTax.
Still expected around 3 to 4% growth.
And Credit Karma, still expecting that really high growth.
Yep. Full year growth for Credit Karma is now pegged at approximately 28%.
28% for the full year.
All right.
And they even give guidance for Q4 specifically, right? The current quarter.
They did. For Q4, revenue expected between $3.723 billion and $3.760 billion. That would be 17 to 18% growth versus last year's Q4.
So the momentum is expected to continue.
Seems so. And they specifically called out expecting the Global Business Solutions online ecosystem to grow about 21% in Q4.
And EPS for Q4.
GAAP diluted EPS guided to $0.84 to $0.89. Non-GAAP between $2.63 and $2.68.
All right, so a strong finish expected for the fiscal year. Shifting gears a bit, what about capital? Cash, debt, shareholder returns.
Okay, so as of April 30th, they had about $6.2 billion in cash and investments. Debt was around $6.4 billion.
Pretty balanced there.
Yeah. And interestingly, they bought back a lot of their own stock in the quarter, $754 million worth.
$754 million in buybacks. Why do companies typically do that? Belief the stock's undervalued.
That's often part of it, yeah. Or it's just a way to return cash to shareholders, boost EPS a bit. It generally signals management confidence.
And they still have authorization to buy back more.
They do. About $2.8 billion remaining under the current plan.
Okay. Any dividends?
Yep. They announced the quarterly dividend is approved at $1.04 per share.
$1.04. How does that compare?
That's actually a 16% increase compared to the dividend they paid this time last year. So another way they're returning value to shareholders.
16% dividend hike. Okay. Now, before we wrap, we should probably mention the usual disclaimer stuff, right? The forward-looking statements,
Absolutely crucial, yeah. Both the press release and the fact sheet have those cautions about forward-looking statements.
which basically means,
Basically means all these projections and guidance numbers we've been talking about, they're forecasts. They're not guarantees.
right, things could change.
Exactly. Actual results could end up being different because of all sorts of risks and uncertainties. Things like, more competition than expected, technology changing faster than they adapt, the economy taking a downturn, new regulations.
All the usual suspects that can impact a business.
Precisely. It's standard stuff to include, but it's really important context. These are projections based on what they know now, but the future can be unpredictable.
Got it. Okay, so summing it all up then, Intuit turned in a really strong Q3 for fiscal 2025.
Yeah, solid growth across the board, really.
Mhm.
Consumer Group, Global Business Solutions, Credit Karma, all pulling their weight.
And that TurboTax Live story is particularly interesting, showing that shift towards assisted tax prep gaining serious steam.
Definitely. And based on that strong quarter, they've raised their outlook for the whole year. Seems like
Mhm.
they're feeling pretty confident about their platform, their strategy.
Especially with that increasing focus on AI integration you mentioned earlier.
Right. Which kind of leads to a final thought, maybe something for you, the listener, to chew on. As Intuit keeps pushing forward with AI, integrating things like QuickBooks and Credit Karma and TurboTax, how might all these results, this strategy, how might it actually change how we, as individuals or businesses, manage our money in the next few years?
You mean like the balance between doing it yourself versus paying for AI or human help?
Yeah, that's part of it. Think about that balance, especially in taxes, or the way different financial tools might get mashed together on one platform, and just, the bigger role technology like AI might play in our financial lives, for better or worse.
Interesting. That interplay between DIY, assisted services, integrated platforms, and AI. Definitely something to watch.
For sure. Lots to think about there.